Okay, fantastic. So let's get straight into it. It's been a pretty busy week this week on the commodities front. We've seen a number of big moves from gold to coffee to oil. Oil earlier on this week, we saw WTI and Brent crude oil soar over 5% in less than 1 hour as Saudi Arabia and Russia, two of the world's top oil producers, signed an agreement to stabilize oil prices at the G20 summit. Now, all eyes at the moment are on the upcoming OPEC meeting in Algeria, which is taking place between September the 26th to the 28th. And we'll have a look at that on the charts very shortly and talk you through oil. Now, coffee prices this week, as we've discussed a number of times during the weekly sessions, have now broken out significantly. We've broken out to 18-month highs. We're at the highest level since February 2015. We've seen coffee prices break out to 18-week highs here on concerns about the impact of cold temperatures and rains on crops in the top producer, Brazil. Coffee is now up over 13% in 2016, with further gains expected. And again, we'll look at that on the charts with you very shortly. As we've mentioned previously, our research does show us that hedge funds, they've continued to switch their focus to soft commodities. They've boosted bets in sugar and coffee to the highest in since 2014, the highest in over 2 years here. We've seen net long positions across soft commodities continue to gain momentum, and sugar is now up 31% in 2016. Now, we also saw gold last week. It held onto a very key area of support, which is at 1,300 US dollars per ounce. The gold price jumped up on the non-farm payrolls following on from disappointing numbers there. We saw a breakout to the upside. In fact, we've now seen gold over the last week rally just shy of 500 points here. Gold is up 27% so far this year as uncertainty over US economic growth has dampened the expectations that the Federal Reserve will raise rates later this month.